One of the most important things about market trends and having bias is knowing when the bias may be eroding and transitioning into chop. So I think when we think about where the market was into the close for Monday and where the market is for the close today, I think the distinction is pretty dramatic in that yesterday we had a predominance of green grab candles and we had a single blue, and the market pulled back into the wave and had Darvis support, and then it continued up into, through the Asian session and into even the early part of the day, right? Even after the Rex Tillerson announcement. And because we had this long position and it hit basically two resistance levels, one 3 points in front of 2,800, and two, if traders were holding out for a retest of the 2,805 highs, both those levels were hit. And there's a couple really important reasons why profit targets are so important, and that acknowledging them is so important, because it allows you to do two things. One, pay yourself, and two, reduce your position size. And this part reduces your risk. And then the last part of this is you move your stop to a break even. So in whatever order you do this, all three of these things are hugely important, because this is the process by which, again, take profits off the table, reduce position size, move to the break even. And all this is about protecting your capital, right? So by the time we get down to this level, that's the very last spot that previous trade on the ES was even valid. So we could say the same thing on the NQ, same exact conversation. We have again, this is a 60-minute time frame, very nice uptrend. We checked in with the wave right into the close, and then took that into all this through here on 4 p.m. yesterday, and took that through. Whether or not you were looking at the Darvis level here as a potential profit target, or even stepping out in front of 7,200, either way, once again, you followed these steps, right? Up in here, you paid yourself, right? You reduced position size, which is also reducing risk. And then you moved to the break even. And again, all this is about paying yourself, but at the same time, simultaneously, it's capital preservation. So once we break this level here, at that point, you're out, even if you faded this level. Now, part of the fade, and I'll talk about that a little bit later on, but part of the fade is a very tight stop. So even if you faded this level, it was pretty much grand opening, grand closing. And then now we're doing what? We're struggling to do what has come very typically easy, which is a blatant, observable, obvious, right? Directional bias. Now, the daily still has it, no doubt. There's still a ton of directional bias on the daily. And I do feel buy the dip is still a conversation that's not gone anywhere. It may not feel like that on a day like today, but I think buy the dip really hasn't gone anywhere. And there will be levels that I think on longer term time frames, traders will be observing as to where ultimately we catch a bid. I think it's a little bit easier on the NASDAQ. But as we talk about the trade management for yesterday's 60-minute setups, that's really what it's about. And if you did take the fade stops are pretty much on the other side of the range extreme low. So if you got the containment and that filter was what you were looking for, the trade never happened. But if you were simply comfortable fading the 60-minute oversold level, it was basically, again, why do I call it grand opening, grand closing? We were in and then we were out. Midday, it looked like the market might recover, but obviously as we're going into the latter part of the day, we're still in meltdown and we still don't have clarity by way of bias, which makes, again, picking a direction really tough. Because you might say, well, Raghee, let's take the short. That's not how I play, because then I would need some sort of 60 and 5 confirming it, right? So 60 is choppy. 5 isn't really an obvious downtrend. I don't have dots. I don't have consistency of the red grab candles. Let me show you here on the NQ. Oh, that's not exactly true. That might be close. That might be close on NQ. I was actually looking at dollar yen as well. I don't have enough on ES, but it is very close. And nope. So we actually might look at some bearishness, and we'll talk about this into the close. So that's what I've got for you as we go into the last hour of today, of Tuesday.